Investing and saving today in 2022 is significantly easier compared to how things were 50 years ago. Understanding the history and evolution of the personal finance industry is really important. It helps us appreciate just how far we've come and truly appreciate all the options that are available to us here in 2022. Today, we'll discuss how this evolution occurred over the decades and how we came to where we are today. Welcome back to No Fuss Finance. Leave a like and subscribe if you haven't already for weekly BS-free videos. Alright, let's get into it. When we think about personal finance and savings, we often think about a sum of money that keeps growing in our bank account. It's not money that we can physically touch or hold. It's a concept that we keep working towards growing. Now, things weren't always like this. Money as a concept started back in 650 BC. Back then, they used coins that were hefty and bulky. The main usage of these coins were to buy things, but the concept of storing or compounding these hefty coins didn't really occur to people back then. The average Joe had a certain number of coins, and they'd use these coins to buy food and get shelter, but that was it. The concept of money was purely survival focused. Fast forward to the 11th century. We now have moved on from these bulky heavy coins to paper money. Now this was a revolution. The idea of being able to buy goods and services utilizing something as functional and lightweight as paper was a game changer. In my research, I couldn't really find concrete evidence for this, but I suspect that the average Joe started thinking more and more about saving during this time. From a purely logistical perspective, this should have been much easier given that paper money barely took any space, it could be easily hidden, it could be carried when people traveled. So I bet around this time, people really started thinking about stashing money away for a rainy day. And I think this is where the concept of saving and investing really started. Since the advent of paper money, things have started progressing quite a bit. Banks, technological advancements, and various other financial instruments have made it easier to store money and invest in personal goods like homes, farms, small businesses, and so on. Now let's fast forward to the last 50 years and we'll start by taking a look at the 1970s. This was the era of the Great Inflation, where prices of all the commodities were much higher than expected. Now in that period, managing personal finance was difficult. The average Joe was mostly concerned about getting through the month. A large part of this was driven by high inflation. Personal finance in this era was mostly defined by financial stability. This meant just having enough to ensure their families were well fed, homed, and dressed. The concept of investments or building wealth was mostly for the ultra-rich and wealthy, and not for the average Joe. When the 80s rolled in, things started to look up slightly. The economic situation started improving, and the banking sector as well as the average people started to steer their attention more towards savings and building wealth. Inflation rates dropped during this time, and many people started to think about the future. They started to ask themselves how to leave behind wealth and money to the next generation. The banking sector also started to see a big boom during this time, and people were more amenable to storing money and investing. And that brings us to the 90s. Now this is where the concept of personal finance took a major turn. People started to think more and more about investing. Investing was not just some alien concept only for the rich and financially savvy. Options to invest in mutual funds, index funds, and various other financial instruments started coming in, making it easier for people to start growing their wealth. Now in the 2000s, there were two major things that happened. The first is the internet, and the second is economic crises. The internet started booming, and with it, the digitization of services and banking features made it such that investing and growing wealth was even more accessible to the average public. But what held a lot of people back were two of the major crises in the 2000s. With global economic crisis comes a fear of investments, of banks, of stocks, and general trust in the financial industry. Now, despite these technological advancements, the 2000s saw fewer people investing in their future through financial products because of this fear. Now we fast forward to the 2010s. People started to slowly get over their fear of investments and financial failures. Interest on consumer debts also fell further, which enabled people to profitably utilize their earnings constructively. Banks also took advantage of this eagerness from the public by offering even more services like individual trading platforms, easy access to digital technology, and much more. Now this is where people started to really think about investing in their future. They started to veer more towards business stocks, ETFs, and much more. And today, in the 2020s, things are just on another level. There are numerous apps, platforms, and digital services that enable anyone to access personal financial instruments. If you want to invest in stocks, bonds, all the way to investing in properties or even in the metaverse, things like art and collectibles, it's all there in your fingertips. I want you to take a moment to think about the first mode of transactions all the way back in 650 BC with those large, heavy coins, and how much things have changed since then, where today, we're literally spoiled for choices when it comes to personal finance and investment platforms. There are educational resources, YouTube videos with really good content, and thousands of technology options to choose from. Now the question is, what do we do with all this context and knowledge about how personal finance has evolved over the times? It gives us an appreciation of where we are today and how lucky we are to be living in 2022, where access to the option of building passive income, wealth, and managing personal finance is just so stupidly easy. I urge you to think about how far we've come and really take advantage of the thousands of resources available to you. Now is the best time to take charge of your finances and think about how lucky you are to be here in 2022, taking advantage of centuries of people slowly improving the banking and financial systems to be where we are today. So the one thing I want to leave you with is take action now.